Okay, good morning, everyone. Welcome to the NYCERS and BERS Investment Committee meetings. Today is November 20th, 2024, and we will begin the meeting with a roll call.
Good morning, Chair, Mayor's Office.
Kevin Liu, representing Mayor Adams.
Comptroller's Office.
John Dorsett, designee for Comptroller Brad Lander.
Public Advocate's Office. Borough President Manhattan. Borough President Brooklyn.
Karina Lozada-Smith for Brooklyn Borough President Antonio Reynoso.
Borough President Bronx.
Robert Maraglia for Borough President Vanessa L. Gibson.
Borough President Queens.
Alan Swisher for Queensborough President Donovan Richards.
Borough President Staten Island.
Daniel Master for Staten Island Borough President Vito Fasella.
International Brotherhood of Teamsters. Transport Workers Union. District Council 37.
Robin Roach on behalf of Executive Director Henry Garrido.
We have a quorum.
Thank you. And for BERS staff and trustee on Zoom, please identify yourself for the record.
Yeah, hi, this is Salil from BERS. In attendance today, we have Merrill Ali, and we also have John Dorsa, designee for Comptroller Lander. I believe I see Alice, is that right? So we don't have quorum for this meeting, but we'll take this up at our next meeting. Thank you.
Okay, thank you. And I will hand it over to Comptroller's Office, Mr. Dorsa.
We're on the same page. All right, so we have just a couple of items that we're going to do in public session. Before we get to Steve's earth-shattering market commentary, we're going to start with Donald DeRosa is going to give us an update on the new cover memo, which we hope to unveil by the end of the year, maybe as early as December. So, Donald, take it away.
Maybe. No, we will. Good morning, everyone. So I just wanted to take a couple quick moments to talk about something that was previewed a bit at BAM University, and for those that also review the slides, you probably saw, which is the cover memo. And for the purpose of today's meeting, we are just doing this in public session. What I'm going to share on the screen is a draft document, but when we plan to implement this next month moving forward, this document will, of course, be filled with privileged and confidential information, and will be used in executive session to guide the meetings. But that being said, if we take a step back to the STAR report, one of the things that was heard from trustees is that BAM provides a litany of dense documents to trustees, whether that be BAM curated documents, consultant memos, manager presentations, and we are all cognizant that this is not your day job. And while we encourage you to read through the hundreds of pages of documents that we send to you on a monthly basis, we know that that is sometimes not feasible. So what we came up with was a cover memo, which is not replacing anything that we are sending you. It is really a supplement to what is provided to you. And it is supposed to be a guide to the meeting where it will flow seamlessly. We're extracting the top line details of largely the recommendations that we're putting in front of you to give you the information at your fingertips to what you need to make these important decisions. So I'm going to quickly walk through the memo itself, and of course, please stop me if anyone has any questions on this. So as you could see from page 1 of the memo, the agenda and actions required, this is really, as I was alluding to, this one-stop shop to kind of guide through the meeting itself. And you could see separating public from executive, the agenda item itself, the applicable materials that you'll find in the Convene portal, the presenters of who from BAM is speaking to you about a specific deal, who from the manager is speaking to you, as well as the action required on your part, whether that be just advisory or a vote itself. And then moving on to the portfolio top lines, we are taking what Steve gives in his presentation in executive session. And while that's still going to be its own PowerPoint, we're also going to extract that data and put it in this cover memo so you could also have it at your fingertips. And we are also experimenting with some new graphs and ways to present this data, specifically the portfolio under overweights. That was traditionally a chart with a lot of numbers on it, so we wanted to make this a little more clear and seamless and easy on the eyes. And I believe in the executive presentation today, that's also going to be utilized. And then moving to the third part of investment recommendations, which I really consider the meat of this memo. This is what we are pulling out from the BAM investment recommendation memo and putting into this cover memo. And I want to make a point that this went through a multi-layer review process within BAM, and it also included feedback from our investment teams, which is how we got to this final draft, which I still consider a working document, and I'll make a point of that a little later, where we wanted to make sure that we're pulling out from these memos the most applicable and important information about these specific deals. So as you could see, a brief background of the deal, the highlights and considerations, along with some of the top line numbers on the overview, economics, strategy, and key terms, as well as pulling out any additional considerations, whether that be risk compliance, ESG related, and the like, along with the fee analysis, a possible current investment that the system might have, and then ultimately the trustee decision that needs to be made, and that's to approve X amount of dollars to a specific deal, along with the consultant recommendation. To the point of this being a living document, we plan on publishing and moving forward with this next month. We want this to be workable, and at the end of the day, this is to make your lives easier. So we, of course, expect, growing pains, and if there are things that are not clear to you in this memo when we utilize this next month, or you think there's something that should be pulled out and put into this memo, we want to have this open line of communication. I really encourage anyone to reach out to me with recommendations or something that could be changed, because we want this to be workable. We want it to be as easy as possible for you to get through these meetings and have this information at your fingertips. And then the last page, which is more as needed, specifics is strategic topics that we might want to talk about at the meetings when we have quarterly materials, just highlighting that they are in the Convene portal, what the document is labeled as, where you can find it, potential other updates, which may include BAMograms that we sent, and a brief note of that if you needed to take a look at it, along with topics for future investment meetings. So this is all in all the cover memo. We're really excited for this. We think it's just going to be incredibly helpful to all of you to get through these meetings in a little more of a clear and concise way. And of course, happy to take any questions or speak to anyone offline if you have any thoughts.
Questions, concerns, comments? Hearing none, I, for one, am looking forward to utilizing the new cover memo. And I hope it makes trustees' lives a little bit easier, recognizing that a lot of people here wear many hats when it comes to their regular course of work. So with that, thank you, Donald. We're going to turn it over to Steve Meyer, the Chief Investment Officer.
Good morning, trustees, and thank you for that introduction, John. So we actually have put together some new slides. I think Donald reflected that we're trying to provide more context and information to the trustees, also those beneficiaries and participants that happen to dial in for public session. So today's the first bite at the apple, but we'd love to have your feedback, whether we're hitting our mark and whether this makes sense. Maybe one slide ahead, Kate, please. So we're trying to give you a sense for what's going on in the economy and how ultimately that impacts your portfolio. And as you can see in the upper left-hand side, the economy has actually been quite strong. At the top, U.S. Third quarter GDP was actually up 2.8%, down a little bit from 3% in the second quarter, but still above trend and actually quite strong. You can also see some of the other large economies in the world in terms of their performance. So it looks like China is a standout at 4.6%, down a little bit from second quarter, 4.2%. However, they have an expectation and a target of hitting 5%. So that economy isn't doing as well as certainly the Chinese government would like to see. Further down, I think it's worth noting that Germany is actually in a technical recession with 2 back-to-back quarters of negative GDP growth. Below that, on the lower left-hand side, inflation is actually pretty well behaved. It was in September 2.4% CPI. It actually moved up to 2.6% in October, but still trending at some point in some levels towards the Fed's 2% target. You can see below that as well, inflation is still a little bit stickier in the EU at 3.2%, and in Germany 3.3%. Again, those are older statistics from the second quarter, but again, inflation seems to be moving in the right direction. On the upper right-hand side, employment. We still have a 4.1% unemployment rate, which is actually quite strong and unchanged from the prior month of September and October. Labor participation rate is still below where it was pre-pandemic by about 1%, but again, 62-63% range. And lastly, on the employment section, you can see that the non-farm payroll changes for the month of October, actually consensus was for 100,000 jobs to be created. It came in a paltry 12,000 jobs created. And again, that had more to do with the two hurricanes we had in the month of October, as well as the Boeing strike. So that's expected to revert to a higher level when we have the November numbers in early December. And on the bottom of that page, you can see in the last month, the U.S. dollar has been incredibly strong. These are actually measures of U.S. dollar, of foreign currencies relative to the U.S. dollar, and you can see weakness across the board. That has a lot to do with a few things. Firstly, the expectation for increase in tariffs in a post-Trump world, which will hurt international trade potentially. Also for those countries that have lower trade and a lower currency, they could be importing inflation, meaning when they do business with outside entities, if their currency is weak, they could be bringing in a little bit more inflation. Also, it's evidence of uncertainty in the marketplace as well. On the next slide, Kate, a quick look at rates and spreads. That's okay. He's multitasking as usual. But just a look at our official rates in the upper left-hand side when Kate gets the slide up. On the upper left-hand side, you can see that rates have actually moved down. In U.S. Fed funds, target rate is down a full 75 basis points. There's been two official interest rate cuts by the Fed, one of 50 basis points and one more recently on November 7th of 25 basis points. So again, 75 basis points moved down in official rates to an upper limit of 475. Also, you've seen the Bank of England and the ECB, the European Central Bank, have reduced rates by 50 and 75 basis respectively. And the Bank of Japan is kind of an outlier. If you remember that the Bank of Japan hadn't raised rates in almost 16 years, they've actually raised rates twice now, going from a negative 10 basis points in 2 steps to a positive 25 basis points, so a 35 basis point increase in rates. On the right-hand side, you can look at credit spreads. Those are credit spreads and investment grade up top and high yield below that. Investment credit spreads are actually very, very tight at I think 74 basis points for investment grade credit. That's very, very tight and really not compelling from an investment standpoint, but evidence of a couple things. Base rates are higher and the absolute level of yields are actually relatively attractive for many investors. And below that, you can see that the credit spreads for high yield relative to this analysis is about 2.5%. That's down significantly. A year ago, these levels were 120 basis points above comparable treasuries for investment grade and 390 basis points, or 3.9%, above comparable treasuries for high yield. So quite a good move, meaning tighter credit spreads, higher bond prices, which just helps your portfolio. And below that, you can see a chart of the yield curve. We're still inverted at the short end, meaning that short-term rates have higher yields than longer short-term rates. And you can look further out the curve out to 30 years. You can see it's starting to normalize, that rates have come down as the Fed is actually started to reduce official rates in the short end. On the next slide, a quick look at public markets. Here you can look at global equities on the left-hand side, starting with North America. And you can see that obviously there's a lot of green on that screen and some white that actually should be green, just when we took the snapshot. But I think the biggest takeaway here is year to date, the NASDAQ is up 28%, the S&P 500 up fully 25%, and the Dow Jones Industrial Average is up almost 16.5%. Below that, you can see that there's been some positive move in Canada, and Mexico and Brazil have struggled a little bit. And in Europe, a lot of green on those screens, as well as those markets have continued to recover as the inflation's come down and official rates have started to move lower as well. And on the bottom of that page, you can see Asia Pacific. The Nikkei in Japan is up 15% local currency terms. The Hang Seng Index in Hong Kong up 16%. Chinese market up 19, almost 20%, and the Australian market up almost 8%. On the right-hand side, that's a look at 10-year U.S. 10-year sovereign yields around the world. And if you look up top, you can see U.S. rates have actually backed up pretty significantly year to date. They're almost 60 basis points higher than they started. Higher yields means lower bond prices. Again, kind of works against the portfolio performance, but again, as you continue to put money to work into bonds at higher yields, that will help power the performance of the portfolio over time. And the last slide is a look at your performance, or actually your returns across both equities, fixed income, and then alternatives with marks through the end of June. I'd say the takeaways here is I always focus on the long term, so I would look at the far right in 10 years to get a sense what the performance has been in terms of equities up to over 12%. Private equity up over almost 14%, infrastructure up almost 12%. Most importantly, on the far right-hand side, your portfolio has delivered on average 7.6% returns above your 7% hurdle rate, which is very positive. I'd say more on the short term, if you looked at 3 months through the end of September, that's actually the first quarter of fiscal year 2025 and third quarter of calendar year 2024. But again, strong performance across the board, with the exception of private real estate, which is off a little bit. Positive returns, again, across equities, fixed income, and alternative investments. And with that, I'll open up to questions, if there are any.
Any questions? Hearing none. Thank you, Steve. And to remind everybody, if you do have questions between meetings, Steve is also available to answer any questions. So I believe that that concludes the public agenda. So I would make a motion to exit public and enter into executive.
Second.
Thank you. So the motion's been made and second. All those in favor, please indicate by saying aye. Aye. Any opposed? Any abstentions? Hearing none, the motion carries. We are now in executive session, so I would ask that the camera turn it over to the chair.
Okay, so now we're back in public. Ms. Winery, would you please do the readout?
The board agreed to commit funds to 1 alternative credit, 1 real estate, 2 infrastructure, and 1 private equity investment, and made 1 public equity decision.
Great. And with that, I would like to make a motion to adjourn.
I'll second.
Thank you. We stand adjourned.
Kind of stunned.
Thank you.